Another thing which I would like to cover is the alternative stop loss method. It's my favorite position management method, and it deals with a scenario that every trader knows and every trader hates. It goes like this. If you look at the picture, then you can see that I have a long level there. This long level was based on the volume accumulation setup. You can see volume accumulation inside rotation followed by an uptrend. So when the price made it back to this level, I went long. By the way, this is a real trade which I took last year, I think. And as you can see, the price went past my long level and it hit the stop loss only to turn and go upwards. So this is the scenario that every trader knows and hates, right? But this doesn't happen when you use the alternative stop loss method, because with the alternative stop loss method, you don't actually quit your trade when it hits the stop loss. So when the price hit the dotted line marked stop loss, I didn't quit my trade. I held it. And the reason is that I only quit my trade when a daily candle closes past this red dotted line, past the stop loss. So as you can see, I have my stop loss in the low volume area. The price touched it but didn't close below it. So I held the trade and I was able to take a full profit from it. However, there's one pretty risky thing, and the thing is that the market can go crazy, right? So for that reason, you need to have catastrophic stop loss, which is sort of safety pin, and it's the worst case scenario which could happen. And this is very important. Catastrophic stop loss is very important to have from the money management point of view, so you know what the worst case scenario could be. I use the catastrophic stop loss as 150% of my standard stop loss. So if, for example, in this case the stop loss, the red dotted line, was 100 pips distant from the entry point, then the catastrophic stop loss would be 150 pips. And the thing with the catastrophic stop loss is that this is a hard stop loss. This is a market order which is waiting in your trading platform. When the price hits it, it's over. At first touch, you are out of the trade. Alright? This is the safety pin for your trades. Let's have a look at one more example of the alternative stop loss. Again, this is the volume accumulation setup, and there is a green line which was a strong support. As you can see, I went long from there. The price shot past the level without any reaction, and then there was the massive red candle, selling candle, which closed below the standard stop loss. It closed below the red dotted line. So at the end of the day, I quit my trade when there was the close of the day below the standard stop loss. Alright, so this is how you use the alternative stop loss. I've been using it for a few years now, and my results were much better than if I was using the standard stop loss. Important thing is that I use it only with my swing trades, not with my intraday trades. It would be pretty crazy with intraday trades, so it's better with swing trades. I think you guys should definitely give it a try. I think you will be surprised how well it works and how many trades it will save.